Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, distinguished senior representatives from Indonesia government. Bapak Rizal Edwin Manansang, Deputy Assistant for Digital Economy, Coordinating Ministry of Economic Affairs. Thank you for joining us, Pak Edwin Manansang. And then Bapak Triyono Gani, Head of Group of Digital Finance Innovation, Indonesia's Finance Services Authority, OJK. Thank you for joining us, Pak Triyono Gani. And also Bapak Dudi Dermawan, Head of Group of Large Value Payment System and Retail Payment System Licensing Bank Indonesia. Ibu Fitria Irmi Triswati, Head of Group Department of Payment System Policy, Bank Indonesia.
Good afternoon, everyone.
On behalf of Payment System Policy Department Director, Ibu Retno Ponco Wendarti, Ibu Rahma Fatmaningrum, Institutional Relations, International Relations, and Policy Communications, Group Manager, Payment System Policy Department, Bank Indonesia. Bapak Dino Milano Siregar, Director Group of Digital Finance Innovation, Indonesia's Finance Services Authority, OJK. Bapak Maskum, Advisor Group of Digital Finance Innovation, Indonesia's Finance Services Authority, OJK. Ibu Iren Swa Suryani, Deputy Assistant for SMES Financing, Ministry of Cooperative and SMES. Our distinguished speakers, Mr. David Rimbo, Managing Partner, EY, Indonesia. And then Mr. Matthew Lovat, Executive Committee Member, Singapore Fintech Association. Mr. Andrew McCormack, Center Head, Bank for International Settlements, BIS Innovation Hub. And the one and only ladies here, Mrs. Tania Ziegler, Head of Global Benchmarking, Cambridge Center for Alternative Finance. Distinguished Indonesia Fintech Association, AFTECH board members, and AFTECH Secretariat, ladies and gentlemen. Good afternoon. Thank you for joining us today. I would like to introduce you. My name is Tiffany Chitraitama, and I will be your host and also moderator for the panel discussion today. Feeling glad and honored to welcome all of you today on our discussion. Fintech Talk, Scaling Up Fintech Industry, how regulatory framework can support and accelerate the industry to the next stage. So, ladies and gentlemen, to all participants, before we begin the panel discussion, I would like to explain briefly general rule for today's events. When the event takes place, all of you will be automatically on mute. I would highly encourage you to use name with this format, your name and your institution, and we provide opportunities for everyone here to drop your questions at Q&A box right after the panel discussion session. So you can put or you can write your questions on Q&A box below your Zoom screen from the beginning of the session, and state your questions clearly and wisely. Choose your word when asking with the speakers or the panelists. Okay, speaking about our discussion or panel discussion today about Fintech Talk, Scaling Up Fintech Industry, how regulatory framework can support and accelerate the industry to the next stage. Digital transformation, as we know, is something that cannot be avoided in this digital economy era. So along with the development of the digital economy, financial services industry, including financial technology companies, it must be able to adapt to changes in the business environment in order to continue to compete and be able to answer market needs for fast, easy, affordable, reliable financial services and improve their efficiency. So Indonesian regulatory bodies and fintech companies are trying to strike a balance that will encourage innovation in this industry while also maintaining a regulation that ensures customers' security. Several policies have been carried out, including optimization of the regulatory sandbox and OJK, Infinity, as well as supporting product, service, and business model innovation by financial services institutions, including through the digital transformation. It's important and timely that we gather here, all of us, to discuss a holistic and also a balanced strategy, of course, to create an environment conducive to innovation while ensuring the resilience of fintech innovation and services. With this theme, as I mentioned you earlier, how regulatory framework can support and accelerate the industry to the next stage. Today's FinTech will discuss, identify several policy responses that are needed to balance the benefits of innovation and the various potential risks. The panel discussion will also feature representatives from the Bank for International Settlements, BIS Innovation Hub, Ernst & Young Indonesia, EY Indonesia, Cambridge Center of Alternative Finance, CCAF, and Singapore Fintech Association to discuss this related topic. So without further ado, I would like to invite Bapak Budi Ganda Subrata as Vice Chairman of AFTECH and Managing Director of GoPay to deliver his welcoming remarks and officially opens today's discussion. Please welcome Bapak Budi Ganda Subrata.
Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone. I would like to also extend my greeting to our co-host today, Pak Triyono Gani, Head of Group Digital Finance Innovation, GIKD of OJK. Thank you so much, Pak, for co-hosting the event. Bapak Rizal Edwin Manansang from Kemenko, thank you so much as well for attending this event. There's also Pak Dudi, Ibu Fitria from Bank Indonesia. Thank you, Bapak, Ibu, kehadirannya.
Terima kasih.
Thank you for inviting me, Pak.
You're welcome. Your presence is always welcome, Pak. Pak Dino, Pak Maskum from OJK, terima kasih Bapak juga atas Bapak-Bapak kehadirannya. Ibu Irene Suasuryani dari Kementerian Koperasi dan UMKM juga, terima kasih kehadirannya, Bu. Our distinguished speakers, especially thank you for your participation today, Bapak David Rimbo from EY Indonesia, Matthew from Singapore Fintech Association, Andrew McCormack, Center Head for Bank International Settlement Innovation Hub, and Tanya Ziegler from Cambridge Center for Alternative Finance. Ladies and gentlemen, AFTECH members, again, thank you so much for the attendance today. I'm really looking forward to a very fruitful discussion. I would like to welcome everyone today in today's Fintech Talk that is hosted in collaboration between the Indonesian Financial Services Authority, OJK, in particular Digital Finance Innovation Group, GIKD, with the theme of Scaling Up Fintech Industry, how regulatory framework can support and accelerate the industry to the next stage. Fintech industry continues to grow and evolve as shown by increasing numbers of startups and players in the ecosystem. More diverse financial services solution offered, as well as rising adoptions in the market. Digitalization in the financial services, which also shown by rapid increase of fintech adoption, is only to further grow and help accelerate economic recovery. We are also grateful that the government continues to support and facilitate the development of ecosystem that supports responsible digital innovation and transformation in Indonesia. Regulators and fintech ecosystem are collaborating to balance innovation with implementation of good governance principles to ensure consumer protection. Since last year, the fintech industry has witnessed the government's effort in building a more conducive regulatory framework in fintech and the overall digital economy through issuance of master plans, blueprints, roadmaps, as well as other technical implementation regulations, such as the sandbox regulation and other regulations as well. The association, AFTECH, especially welcomes the government's effort in supporting the growth of fintech industry and digital economy through light touch and safe harbor policy. We also support the effort to further promote consumer protection and good governance to maintain the integrity and increase competitiveness of Indonesia's fintech industry. Stronger collaboration between governments, fintech industry players, and other stakeholders are imperative to achieve these goals. Ladies and gentlemen, discussing regulatory framework in a holistic manner is critical to ensure a development of strong, sustainable, and competitive digital finance services architecture in Indonesia. In the end, this all aims to create a more inclusive and ultimately a more sustainable economic growth. With the objective to discuss the development of regulatory framework in supporting the growth and fintech in Indonesia, as well as to understand regional and global experiences, AFTECH and OJK GIKD are hosting today's discussion. We are very fortunate to have with us prominent speakers from EY Indonesia, Bank of International Settlement Innovation Hub, Cambridge Center for Alternative Finance, as well as Singapore Fintech Association. As I said earlier today, we hope that today's discussion can support the development of a conducive regulatory framework that balances innovation and governance in Indonesia's fintech industry, as well as facilitate a creation of a strong, sustainable, and competitive digital finance architecture that leads to a further economic growth in the future. Once again, I would like to thank OJK for this collaboration opportunity. Thank you everyone for all of participation, especially our government partners who are in attendance from the Coordinating Ministry of Economic Affairs, Bank Indonesia, OJK, and the Ministry of Cooperative and MSMEs. Thank you also to all panelists today and moderator for their contribution, as well as to all members and participants who are joining us for the event today. I really look forward to have a very fruitful discussion, as well as strengthen cooperation and collaboration between us after the event. Thank you so much. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
After Pak Budi, now I'm delighted to invite Bapak Triyono Gani as Head of Digital Finance Innovation Group, Indonesia Financial Services Authority OJK, to present us the highlights of today's discussion. Please welcome Bapak Triyono Gani.
Thank you very much, Mbak Tiffany Raitama. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone. Edwin Manangsang, thank you, Pak, for coming, Pak.
Terima kasih, Pak.
You should be here to address the keynote speech, Pak, not as the participant, Pak. Budi, ada Bu Fitria, kemudian my colleagues from Deputy Assistant MSME Financing, the Ministry of Cooperative, ya, Ibu Irin Swasuryani, kemudian my colleagues from Bappenas, tadi saya juga melihat ada Pak Herjuno, kemudian certainly my colleagues from OJK, Pak Maskum, Pak Dino, and last but not least, my colleagues from AFTECH, Pak Budi Gana Subrata as Vice Chairman, and also Melissa Morangkir as the Executive Director. And I would like to also greet the distinguished speakers and moderator and distinguished speakers, Pak David Rambo from EY Indonesia, Matthew Lovat from Fintech Association Singapore, and Andrew McCormack from the BIS Innovation Hub, and certainly the only ladies as the speaker this afternoon is Tanya Ziegler from Head of Benchmarking, Cambridge Center of Alternative Finance. First of all, I would like to invite you to express our gratitude to God Almighty, since only with His blessing and willing, we could gather in this very prominent occasion of Fintech Talk held by AFTECH and OJK. This is the co-hosting event with the main topic of scaling up Fintech industry, how to regulatory framework can support and accelerate the industry of the next stage. I just recall when we had the idea to conduct this discussion, I told AFTECH that Ramadan is very good time for us to sit and listen somebody's talking and also learning something. This is very good opportunity because we don't have any energy to do a lot of exercises and also yeah, some heavy tasks. That's why this is very good time for us to sit and listen and to learn as well. I would like to thank you, AFTECH, for inviting me in this appealing event designed to discuss about fintech regulatory framework across the world, including Indonesia, to see how it can bring up fintech industry to the next level and foster fintech development, which subsequently will contribute to economic development. This is especially essential amidst the COVID-19 pandemic, in which Indonesia and the rest of the world has been running into an economic slump. Distinguished ladies and gentlemen, as we all know, the last few decades, technological advances has continued to develop rapidly and has taken us from traditional business process to digital service delivery. Currently, we have entered the so-called digital era, which has changed the order of industrial business processes to be more efficient and make it easier to provide service to customers. This gradually increases customer expectation and change customer perspective on how a service could be called satisfying. So the definition of satisfying could be changed along the time because of the change of expectation from the customer. This is also forces the industry to continue to innovate on their products and services to meet customer expectation, changing the shape of industry itself, including the financial sector. We are now witnessing the changing of our financial sector, and I always say to my colleagues and others that we are going to see a very important moment when the changing is occurring in the market, and we do not really know when we will be stopped because the changing is still in place, and I can expect that something brand new or probably a very different shape would be in the market. Yeah, we used to see the banking, the insurance, and also the capital market running in traditional way, but in the future probably it will be dramatically changed. And I think as the consequences of that, we have to also review our theories and also the textbook probably. So by utilizing technology, financial services can be delivered without the need of physical face-to-face. It's also very right time to be implemented because of the low-touch economy due to the COVID-19 pandemic crisis. So the physical face-to-face contact between companies and customer, and this is the emergence of the so-called financial technology. Reacting to this development of fintech, there are many regulatory practices in fintech across the world. In the early days of fintech, in which the fintech activity is still relatively low, the regulators, most jurisdictions choose the wait-and-see approach. I think as a regulator, OJK and also certainly Bank Indonesia and some other regulator will be experiencing this. I recall in 2018 when we just developed the first regulation, or 2016, sorry, when we just first developed the fintech regulation. We have to really learn what is the gender of or the essence of fintech transactions before we can develop some regulation. And even in that particular date, we also discussing whether we have to regulate fintech, because some other jurisdiction we can see that they are still wait-and-see approach. So I think finally we decided to issue the first regulation on fintech that was in the P2P lending business model. And I think from now on, from that moment, OJK decided not to have a wait and see, but to have a real regulation in place in the market. And with wait and see, leave fintech largely unregulated. So I think again, this is not the choice that we are taking since 2016. To wait and see, the predominant option is, as long as the market film is fintech stay low, I think it is still okay. But if we also see the development of P2P lending, I think the growth is enormous. The growth is very fast. So the wait-and-see approach will be not really applicable. However, a range of benefits and risks were identified in the cases where fintech might go further. If regulation seems appropriate, the fundamental question arises as to whether fintech's risks and rewards can be integrated into existing framework or whether a new paradigm is required. Based on the survey conducted by Cambridge in 2019, on 180 jurisdictions, with NC's adoption is 24%. So this is quite a large number of jurisdictions that face an active fintech industry. Here, the predominant strategy of regulators with 57% is to duck type existing regulation, which essentially means same risk, same rules. This approach holds onto technology neutral principles in which focusing mainly on the economic functionality that a financial service provides. Despite technological change, the underlying core risks in financial markets such as market, credit, liquidity, and personal risk have remained largely the same. In other words, compliance with respect to existing regulation is required in all cases, whether the service is delivered through the traditional channel or digital channel. So we can see that with this approach, the regulator just use the same risk, same rule, or apply the regulation, whether it will be running in the new digital platform or in the traditional platform. This is certainly have a benefit, but also some cost as well. Since according to our experience, it is not really applicable because the new financial services delivered a very different way. So I think we not 100% previous or existing regulation will be applicable to them. Nevertheless, fintech innovation may also lead to new functionality. With the ongoing financial innovation, a combination of risks might emerge. Alternatively, the core risk might show in the forms of only made possible through using new technology. Regulators need to identify these new functions and new risks and code them into the new regulation that specifically address them. This practice is commonly called the new functionality, new rules. Again, this is the third options that a regulator can take, and probably OJK would like to see or maybe to adopt the third methods of regulation framework. But certainly, every single option can bear its cost and also its benefit as well. So it is not really easy to develop new rules according to the market development because of so many factors, one of which if the acceptance of the market is still low as well. So I think according to our experience, probably the combination of three options would be applicable. As the fintech industry grows in the digital ecosystem, it is also important to understand that there will be new risks and challenges that come along with it. This includes cyber risk, which has certainly increased significantly with the use of technology. This subsequently has raised more major questions to the regulators. The most common question is whether regulation need to expand the perimeter of regulation and supervisions. Does the same risk, same rule still apply? What if the rigid regulation just hinder innovation and make the fintech industry crumbling? And another point to be taken in this case is that according to our experience, the silo approach of traditional regulatory framework, it is also giving troublesome, approach to the new technology because of it is sometimes the new proposition offered by the fintech industry is hybrid between one silo to another silo because of you can mention about the omni-channel, for example. They can offer every single services which belongs to every silo. So with the structure of legal framework in Indonesia, which still adopt the silo approach, it will be again very troublesome to create a regulation based on that framework. The answer for some question might be to apply a balanced regulatory framework. On the other hand, the regulation should be designed to be able to promote innovation with potentially positive impact the financial sector and economy as a whole through financial inclusions and literacy, MSME financing, etc. On the other hand, it has to be precise enough to controlling the risk emerged from the innovations such as cyber risk, as well as to ensure customer and data protection, financial stability, and market integrity to be at the top of priorities. This is also a dilemma that we are facing as regulators, not to mention Bank Indonesia probably because the macro views in Bank Indonesia is more prominent than in OJK, but still the main criteria that we are whether we should maintain a particular business model is that whether it will be endangering all the macro stability or not. Because if we don't, for example, if the acceptance of the market has been very large enough and we create a very huge macroeconomic risk, certainly it will also endanger the macro prudential stability. So the balance framework is very easy to say, but very difficult to do. To achieve these objectives, many regulators use a broad set of principles and outcome-focused rules, principle-based, rather than the detailed prescriptions, rule-based regulation. Overall, the principle-based regulatory approach seems to have somewhat gained in importance in the light of fintech developments. One reason might be that it adapts more easily and cost-effectively to new and quickly developing business model due to its less demanding frequency and volume legislation adaptations. I guess this is also very applicable to Indonesia because as you probably know that the process of legislation in Indonesia takes a very long time and very painstaking process. So principle-based will be very much preferable and also suitable to cope the rapid development of fintech industry. One principle that is worth noting at the attempt to implement balanced regulatory framework is proportionality. Regulators shall lower regulatory requirements for financial services institutions and also fintech companies that are of limited risk due to factors such as firm size, systemic importance, complexity, and risk profile. This is particularly to avoid excessive compliance costs or regulatory burdens for small and non-complex fintech companies, as well as as long as customer and data protection, financial stability, and market integrity is still in place. This is also often referred as light touch and safe harbor approach, as previously stated by President Jokowi. Ladies and gentlemen, from today's discussion, we are hoping to be able to answer how to truly implement this framework and approach to embody the best regulation, as currently many parties are still having different views on how to best regulate fintech. With some remarkable speakers we have today, we are going to discuss more about the best practices in the fintech governance and regulation applied across the world, including Indonesia. With this, hopefully we will get the better view of the most suitable regulation design for fintech industry. So we don't say this as the best practice, but the most suitable practices. This will be indeed a valuable input for us, regulators in the financial sector, in composing the regulation and fostering the development of fintech industry. The ultimate goal is to achieve the so-called responsible digital financial innovations, which could give abundant benefit to the economic and society, which always having customer protection and risk mitigation in place. To conclude my remarks, it is evident that various of the risks in the financial technology industry, along with the rapid pace of innovation, require a transformation of regulation and supervision process. Therefore, regulators play an important role, and yet I believe that the cooperation from all parties, including the association and the industry players, will be just as critical. I'm optimistic that as well, or as we all work hard and in hand in creating responsible digital financial innovation, the fintech industry will be keeping growth and scaling up to the next level with sustainable and will stimulate the economic recovery and development. With that, I would like to end my speech and wishing you an enlightening discussion in this session. I do hope that God will support us and guide us to walk in a good endeavor. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam warahmatullahi wabarakatuh. Terima kasih. Thank you so much, Bapak Triyono Gani, sharing your perspective and give us the highlights of today's focus. We hope that what we discuss, what we share today can bring this fintech industry in Indonesia scaling up to the next level. So, Bapak Ibu sekalian, ladies and gentlemen, let us moving forward to our next panel discussion. Okay, ladies and gentlemen, all participants, we have arrived to the highlights of this event panel discussion, which will present representatives from the Bank for International Settlements, BIS, Innovation Hub, Ernst & Young Indonesia, EY Indonesia, Cambridge Center of Alternative Finance, CCAF, and also from Singapore Fintech Association. So before I start the panel discussion, maybe I would like to introduce you, our speakers, and I will read their short profile or short bio. I will introduce you. Our first speaker is Mr. David Rimbo. Mr. David Rimbo as Managing Partner, Strategy and Transactions, EY Indonesia. David is the leader of the EY Indonesia Strategy and Transactions practice. He has been involved in many transactional-based due diligence, M&A, restructuring, and capital market advisory roles. He is also an accredited valuation and business modeling (VNBM) and corporate restructuring partner. David has involved in several financial technology projects, assisting Kominfo, Ministry of ICT, in the preparation of the Indonesia's e-commerce roadmap, and sits in the national policy team for the digital economy and supported Ministry of Information and Telecommunication to accelerate the digital economy system. Okay. Next, our speaker is Mr. Andrew McCormack, Center Head, Bank for International Settlements, BIS Innovation Hub. So, Andrew joined the BIS in April 2020 as the Center Head of the Singapore Innovation Hub. Prior to the BIS, Andrew was Chief Information Officer and VP Payment at Payments, where he was responsible for technology strategy and payment system operations. Under his leadership, Payments Canada embraced cloud technology, launched API services, and led the groundbreaking blockchain research alongside the Bank of Canada. Andrew has an MBA from the Ivy Business School and Bachelor of Computer Science from Carleton University. Thank you for joining us, Andrew. And our third speaker, the one and only ladies here among the speakers, Tania Ziegler. Tania is Head of Global Benchmarking, Cambridge Center for Alternative Finance. So Tania is the Head of Global Benchmarking at the Cambridge Center for Alternative Finance, Cambridge Judge Business School, and manage the Center's Alternative Finance Benchmarking Program. So this program tracks the growth and development of capital raising alternative finance activities spanning Europe, North, Central, and South America, Asia, and the Pacific, and also the Middle East and Africa. Tania has authored 18 industry reports since joining the CCAF. Tania also an expert on SME finance and also leads the center's work on SME access to finance in LATAM. Okay, thank you for joining us, Tania. Hi, how are you? Nice to meet you. And our fourth speaker from Singapore, Fintech Association, Matthew Lovat, Executive Committee Member, Singapore Fintech Association. So Matthew is both a member of the Executive Committee of the Singapore Fintech Association and a director at Deloitte. Prior to joining Deloitte in 2017, Matthew worked at Baker McKenzie, London. Matthew is a Singapore accredited tax advisor, income tax, and in England, and Wells qualified non-practicing solicitor, and provides full spectrum Singapore and international tax and tax structuring advice to clients in the financial services and fintech sectors. Okay, hi Matthew, how are you? Thank you for joining us. So we have our four speakers here for the panel discussion. To open this panel discussion, ladies and gentlemen, maybe I would like to give a chance, an opportunity to Mr. David Rainbow. Mr. David Rainbow will also joining with Mr. David to share the perspective, to share the highlights, to share the thoughts, insight about financial technology regulation globally and in Indonesia perspective. Is Mr. Anugrah Pratama as Associate Partner, EY Indonesia. Hello, how are you, Mr. David? And join with you, Mr. Anugrah. Mr. David, maybe to open this panel discussion, I would like to ask you about your perspective, your thoughts about Indonesia's fintech industry growth and also competitiveness. Which fintech business model offers the most growth in Indonesia? And maybe you can share to us how has fintech changed the architecture of Indonesia financial services sector thus far. Please, Mr. David.
Thank you, Mbak Tiffany. Assalamualaikum warahmatullahi wabarakatuh, distinguished guests, panel speakers, as well as board members of the AFTECH Association of Indonesia and all of the participants in this particular webinars. So from our point of view, once again, operating at the market segment, we are the professional service advisors, with regards to many inbound investments in Indonesia. I think this is what Tiffany's actually have asked is a very common, basically, language. It's a very common questions that we face. What is the prospects of the Indonesian, basically, fintech, basically, sectors? In which particular platform, in which particular verticals things are more conducive? In which particular verticals the growth rate is a bit higher? Now, I think the general take on such a question is the fact that if you look at basically the disruptive as well as the enabling capacity of digital, and financial technology, what is very apparent is the function of serving the unserved, basically, segment. So all of the non-bank, underfinanced, underinsured, under so-called penetrated segment and niches, those are basically the lucrative target markets of all of these verticals. So the way we look at it, I think in terms of growth, definitely being a country with the fourth largest population base, a very young demographic structures, primarily the younger, basically millennial generation, Y generation Z, basically based of what we call digital natives, who adopts basically technology in such a quick manner. Those are actually the attraction for the growth of the sector going forward. I think but Tiffany, apart from talking about the growth prospect, I think one thing that we need to also perhaps pay a bit more attention on in terms of this following discourses is how do we expect all of these platforms and verticals to eventually evolve? Because if you look at it, coming in at the first place, with regards to, online, basically, finance, peer-to-peer lending, etc. Eventually, by the time the business itself is scaled up, and then the needs of the addressed customer segments are also evolving, then the platform cannot run away from also having to evolve to become something that is a bit more comprehensive, something that is a bit more fundamental in terms of providing the financial intermediary, basically, services, which a lot of these market segments are not yet basically accessing into. So I think it is a question about growth, but it is also a question about how to prepare basically all of the players in terms of readying themselves to actually to welcome that potential for scaling up and that potential for so-called evolving into something that is a bit larger. Let's call it the super app model eventually. Now, if I may, I've asked for the permission from Bu Mercy already, Bu Tiffany. My colleague Anugrah will present a little bit of a snapshot of a global benchmarks that we have done. If it's okay, basically, to spend about 3 to 4 minutes to actually to go through some of these benchmarks. I think that will set basically the tone for a lot of the interesting discussion points subsequently. But it's up to you, Bu Mercy, if it's okay to actually to show the slides.
No worries, Pak. Please go ahead.
Okay. Thank you, Pak David, Bu Mercy. So, audience, so allow me also to present. Hello. Hello, can you see my screen?
Yeah.
Yes, can, Pak.
Yeah, so yeah, allow me to share some of the perspective from our side on the global as well as Indonesia perspective, so that we can discuss later on the impact on the regulatory aspect of the fintech in Indonesia. So first, I think we've seen globally the fintech itself has a very significant role in supporting the development as well as boosting the economic growth. Yeah, no doubt, no dispute everywhere. So, for example, in US, how they contribute to the economy, we have also seen the appetite, increasing appetite of investors investing in this particular industry everywhere, as well as it's actually considered as one of the highest growth sectors, even during the pandemic. So in some of the countries, a lot of other traditional industries has been reduced in terms of productivity, in terms of revenue and others, but we can still see fintech in some of the countries are actually increasing, right? The low-touch economy during the pandemic is actually one of the drivers of this particular industry to be increased. This industry has also been getting the attention from the various regulators across the countries, around the globe. So not even the regulators that are considered quite advanced in terms of regulating the industry, because the industry itself has the tendency or the unique characters of being evolving every time. So in terms of a regulatory response, a lot of regulators are actually also evolving in terms of how they're thinking on this industry, how they're catching up with the recent changes, as well as the trends in this industry. So for example, UK, Australia, even, for example, last year has launched initiative to review as well as to improve the regulatory environment of the fintech. Specific for Indonesia, as Pak David mentioned, the uptake for fintech and the contributions of fintech. So we also see the potential growth of fintech as the total percentage of our population are still very high in terms of unbanked, in terms of the need of a further financial inclusivity. So we do see the role of fintech in this particular sectors to increase the financial inclusivity, as well as to modernize, put it that way, the literacy of the people. So we do see the tendency for the untapped or unbanked, those segments that are previously not being tapped by the traditional institutions, but we also see, for example, the uptake from the savvy customers. So they're actually bank populations, but their savvy customers requires more advanced, more convenience. They're actually also jump into as a customers or the target market for this particular fintech. In terms of a regulatory response, we do see good responses from the regulators in Indonesia, from the OJK, as Pak Tri has mentioned, a lot of effort, a lot of benchmarking. But on the other side, we also see a unique situations of Indonesia, that might also influence our perspective on how to regulate and how to nurture this particular industry. So, for example, in terms of the infrastructure, the lack of a telecommunication infrastructure, maybe not within the OJK or Kemenko economy domain, but infrastructure, telecommunication infrastructures, ability to adopt a technology, the industry 4.0, the big data, and so on and so forth, is actually very important to nurture this. There are also several challenges in terms of unregulated fintech players, which brings in a negative perceptions to the overall fintech industry. Higher cost of funds, which open the opportunity to collaborate between the traditional financial institutions, as well as opening up the potential to on the government fund, for example, as well as the typical operational risk faced by various segments. So, for example, if they target the low-end segment, of course, the NPL, challenges in Indonesia of difficulties in getting single identity, for example, is another problem that we need to look at in this particular country. In terms of regulatory environment, we do see the needs to expand beyond what we call the technicality of the fintech. A lot of regulatory regime has focused on how to regulate the process, how to regulate the operations, but we also encourage every one of us to think on how we can nurture this overall industry through various what we call the pillars of the fintech. So the first one is actually the demand, how we can nurture the demand, how we can improve the literacy, how we can educate the people in Indonesia on the benefit of a fintech, as well as the risk of such services. And then how we can encourage the capital, how the regulators can support fintech in terms of bringing in the capital, investors, how we can bring in talent, how we can incentivize talent, the new technology adoptions for our fintech, as well as the question on how to harmonize the traditional players with the new fintech players, how to encourage competition and innovation.
Anugrah, to interrupt, our time is very limited, so maybe you still have maybe 2 or 3 minutes left to share your slides.
Okay. I think we are approaching the end. I think in terms of balancing, as Pak Tri from OJK mentioned, it's very difficult to find the balance. So on the other side, we are faced by the abundance of the benefits from the financial inclusion for better services. But at the other side, we also need to balance that there are challenges, unique challenges in Indonesia, as well as challenges to ensure control of a potential risk, and also the prudence of the financial industry as a whole. And even as Pak Trino mentioned from OJK, if the fintech is considered as a big one, it might impact the overall micro policy of the nation's economy. So we really need to balance out the benefit as well as the challenges. We also see a lot of regulators to collaborate in a various forum. So for example, Global Financial Innovation Network, Asian Financial Innovation Networks, and so on and so forth. So we'll definitely encourage the regulators to share the practices as well as a lesson learned, cross collaboration, cross-pollinate the ideas across the industry, learn together with the other regulators around the world. And I think our perspective is there's no one size fits all in terms of how we approach the fintechs. We borrow the World Bank, the framework in how regulators can see this. So it really depends on the products. It really depends on the service as well as the capability of the regulators, the capacity of the regulators. So the involvements will lies around the 4 metrics. So whether we want to choose extensive experimentations, kind of a hands-off approach, limited regulatory involvement. So we let the players go to the market, we watch and we learn from that and then regulate. Or, for example, if the product and service are very well known, already been regulated, already been learned by other market, for example, we can, of course, choose a more conservative approach. We can choose a more detailed regulatory approach. So our position here is maybe in Indonesia, the approach is based on the type of products and based on the maturity of the products. So there's no one size fits all in terms of a regulatory approach. I think that's from our side, Ibu Tiffany.
Thank you so much, Pak Anugrah, and also Mr. David earlier. Already gives to us your perspective about the fintech industry growth and also competitiveness in Indonesia. So maybe speaking about how this fintech industry growth and also competitiveness, maybe I will go to Matthew. We know that Singapore is very near to us, Indonesia. Maybe you can share to us, Matthew, about how this fintech industry growth and competitiveness in Singapore. You can share your perspective to us. Which fintech business models offers the most growth in Singapore, actually?
Sure, thanks, Tanya. So hi, everybody. Thank you for joining and for the opportunity to speak. So Tiffany, with respect to Singapore's industry growth and competitiveness, I think we see fintech in Singapore is very strong, it's very diverse, and the breadth of interests and talent that we have here adds to the creation of a strong ecosystem that is very conducive to innovation. I think Singapore's position as a financial services hub also supports the growth of the sector, as many investors have platforms of investment managers here who've been exposed to fintech investment opportunities from grassroots level, and that's really facilitated access to capital. Albeit obviously Singapore's role as a regional financial hub means that that's not something exclusive to Singapore, it's something that other stakeholders across Southeast Asia can tap into. The MAS, so the Monetary Authority of Singapore, which is the financial services regulator here, has also had a key role in the development of the sector. It's been very progressive and willing to work directly with fintechs and the wider community to develop the ecosystem. And what we're seeing is that working with stakeholders in that way really helps address both regulatory concerns from the regulatory perspective, whilst also reducing barriers to entry from the startup, SME and fintech perspectives. In terms of business models, I think it's difficult to pinpoint a single vertical or a business model that offers the greatest growth in Singapore. And the reason for that is that the ecosystem is in part successful itself because of the spread and the depth of different activities, different stakeholders here, and the opportunities that brings for partnership and collaboration. We're effectively seeing all of the individual verticals and subsectors evolving and growing together. That said, in terms of particular growth areas, we know that the MAS is very much focused on payments as a focal point. And it's clear that there are opportunities in that sector, as evidenced by the link up between PayNow and Thailand's Prompt Pay that's very recently been reported. Naturally, that feeds into the point about serving underserved that Pat David mentioned a few minutes ago. And it's something that we are seeing a lot of activity around here in Singapore. So I think all in all, the ecosystem is developing as a whole. The regulatory concerns, I think, are help addressed through a very dynamic, proactive regulator and a lot of proactive interaction with the various stakeholders. And the abilities for stakeholders here to collaborate and partner with their peers and other organizations means that there's a lot of opportunity here in terms of creating projects, consortia, and working together as groups in order to try and leverage the various strengths that stakeholders have to develop solutions that are sensitive to the challenges that the different stakeholders are facing.
So Matthew, how has fintech changed the architecture of Singapore's financial services sector thus far, actually? And maybe you can share to us about the partnership, about the partnerships between the financial institutions and also fintech evolve actually nowadays in Singapore.
Okay, sure. So I think the architecture is still very much a work in progress. It may help listeners to understand that my background is as an advisor to financial services stakeholders. And my background is very much focused on the provision of tax structuring advice, sort of advice to financial services. I've been in Singapore for a number of years, and what I've seen throughout my practice over the past years has been a gradual shift in my client base from traditional financial services to fintech, which is largely a function of the way the ecosystem has been developing. What I see as an advisor to both traditional FS and to fintech is that some of the greatest advances that we're seeing in the financial services space are being led by fintech stakeholders. And I think one of the reasons for that is that the large financial services stakeholders very often have legacy systems concerns. They have sophisticated investment and risk management models. And that combination of things often means that incremental returns have to be extremely material before investment can be justified. Fintechs obviously tend to be much smaller and much more agile. And I think it's that agility that really contributes to them leading the market developments. It's much easier from a practical perspective for startups and for SMEs to target and to develop and invest in products and solutions in ways that larger organizations are not really equipped for. So what we're seeing is the gradual development of the ecosystem being led by fintech stakeholders. And then at various points, we've then seen the traditional financial services stakeholders then playing catch up and trying to enter into the space in order to just keep pace with the fintechs. Now, I think we see a number of local fintechs providing products and services behind the firewall of local banks. And in terms of partnership opportunities, the local banks and insurers have been quite receptive to working with fintechs to bring in new products and services to market. One very prominent example here in Singapore is a startup called PolicyPal, which is a local insurtech, which I think is a very good case in point. That group essentially developed a product that was revolutionary, leveraged other platforms, and was able to tap into insurers and insurance underwriting in a way that was revolutionary for the market, and it's been very successful as a result of that. I think one of the other trends that we've been seeing as a direct challenge to banks, specifically in the area of financing, is the growth of decentralized finance, which challenges the role of banks as aggregators of capital. That, with other developments, is effectively forcing banks to adapt their business models. And the growth of platforms and digital challenger banks is also generally leading to a modularization of financial services, which in turn plays well into fintech's hands, as modularization facilitates partnership and collaboration opportunities. So I think having such a diverse fintech ecosystem here in Singapore, having sort of depth of talent, and having such sort of vibrant and very proactive input from the regulator has really worked to the benefit of fintechs. Collaboration and partnership opportunities has then provided access into some of the larger institutions, and partnering with some of the larger institutions effectively to tap into the markets and the client bases that those larger institutions have.
About benefits, and speaking about impact, as you mentioned earlier, maybe I will go to Andrew. Andrew, maybe you can share to us your thoughts or your perspective, your point of view about the current state of innovation and technology in this fintech industry, about what about this impact to the global financial services architecture, and actually who gets the most impacted by the growth of fintech industry thus far?
Yeah, sure. And first of all, thank you so much to the OJK and Fintech Indonesia for the opportunity, and it's an honor to be here with my fellow panelists. And so as we kind of zoom out and take maybe a global perspective, and I know Tanya will have a lot to offer on this front as well, but you know, I always try to think about, okay, well, you know, technology-driven innovation is actually nothing new. If you kind of rewind the clock and go back to the 70s, 80s, and 90s, you know, the kind of the old guard, or the first wave of technology-driven innovation started, you know, with the likes of SWIFT or even Western Union or the card networks, and really they made dramatic improvements over the paper-based, you know, postal bank clearing systems that existed prior to that. Then you kind of think about the early 2000s and the second generation, the PayPals and the Stripes, sorry, not Stripes, but Squares, and you know, really they kind of leveraged the internet infrastructure as kind of the first iteration of internet-based services that, again, had a dramatic improvement on the dissemination of financial services and the availability and accessibility of financial services to you know, a larger population base over time. And really the technology-driven innovators have always really aimed to reduce friction and improve that kind of consumer or customer experience. And I think that now in this third generation or wave, if you will, of fintechs and this explosion of creativity around the world, you know, is certainly starting to bring tremendous benefits. I think the previous speakers from EY and SFA have you know, identified, you know, certainly inclusion and kind of unbanked and underbanked populations as you know, the net beneficiaries in many cases of many of these new services, as banks' cost structures and kind of risk appetites had been, you know, largely excluding very large subsegments of the population. And so I think it's, you know, from an impact perspective, there's no doubt that you know, that fintech has a tremendous opportunity space and can bring tremendous value to end users. And again, all of it predicated on using technology to, you know, distribute services and obviously remove frictions and stuff like that. I think, you know, when I think about the kind of role that, you know, from a BIS perspective, and the Bank for International Settlements, obviously, well, maybe not obviously, but plays a role. kind of in the global financial system oversight. We host a lot of the big committees like the Financial Stability Board, for example, who think about kind of these macro and global issues. You know, we are most interested in kind of these infrastructures that cross borders. And so we think about, you know, how can we help reduce frictions and costs associated with cross-border payments, for example. So that's a key area of interest for us. And obviously there's a lot of fintech players who've also been thinking deeply and in fact coming to market with, you know, very mature and advanced solutions now. And I think that infrastructure space is probably one that I'm watching personally very closely. So the kind of fintech revolution has come from that front end all the way now to the kind of the core, if you will, of you know, what new models can exist. And so I'm particularly excited about the Prompt Pay Now work that Matthew just mentioned. I think you know, connecting the fast payment systems in Singapore and in Thailand is an amazing start, and being able to offer this kind of deep infrastructure connection actually has great potential in terms of, you know, potentially leveling the playing field for other entrants and fintechs and banks even to offer new cross-border payment services that are enabled by kind of deep infrastructure connections, legal regimes, and you know, all of which are actually compliant and focused on ensuring you know, consumer confidence and again opportunity for new players to offer services. So I like to think about you know, innovation not only necessarily coming from the edge and that retail focus, but also, you know, innovation can most definitely happen at the infrastructure level. And you know, I think another great example that everyone talks about is the kind of development of the UPI infrastructure, the payment system in India, right? And that was really led by the bank, the central bank, you know, in terms of driving that change. And then NPCI delivering, you know, the capabilities to market, which have both, you know, enabled, you know, bank-to-bank payments in real time for banks and improve the kind of payment core in India, but also dramatically created opportunities for you know, fintech players to kind of act as payment initiation service providers in that country. And again, that's really driven from a regulatory you know, and perspective. So I think change can certainly come from both perspectives. And I guess the bottom line is that, you know, fintechs large and small have been very successful over the past many decades in removing frictions from payment processes and lowering costs. And bringing better experiences to you know, the banked and eventually the underbanked and unbanked as well. So I'll just leave it with that, and certainly you know, more to say on the as this discussion evolves.
Okay, we're speaking about the regulatory. So Andrew, generally, actually, how have regulators around the world perceived and responded to the growth of this fintech industry? Maybe. We're speaking about in scale Asia or Southeast Asia region.
Yeah, well, so I mean, for sure, you know, I arrived here about 9 months ago, and I have to admit, I'm still learning all of the nuances and complexities of kind of the regional responses and regional markets. So I probably can only say scratch the surface as compared to some of my other colleagues on the panel here. But you know, obviously from a regulatory perspective, the fundamental challenge is going from a very limited universe of entities who are regulated, you know, basically, you know, banks or insurance companies, to a much more heterogeneous and much more populous group. And so that's a fundamental challenge, obviously. And so the kind of the basic problem is that regulators only have so much capacity, and they have to kind of wait for basically risks to emerge or services to become big enough to kind of garner their attention. And I do think in many cases, you know, that's happening actually. And I think you don't have to look too far, you know, over to China, for example, to say, well, the recent developments in the past 6 months have certainly dramatically changed in terms of the posture the regulators there have taken vis-a-vis some of the very large, you know, technology companies who have delivered very, you know, transformational, you know, payment services into the Chinese marketplace. But obviously that the dominance there has come under scrutiny and regulatory pressure as of late. So these are kinds of approaches that regulators can take. But there's many other toolbox, you know, tools in the tool belt, so to speak. And I think you know, regulatory sandboxes, I think, have been brought up a few times. Those can be potentially effective if the marketplace conditions are ready, if they're designed properly, and if they're kind of purpose built for the kind of jurisdictional or regional issues. There's also many other approaches as well, but again, I probably best defer to some of my colleagues with a little more experience on the regional frontier than I have at this current point.
Okay, thank you, Andrew. I'm going to the one and only ladies here, Tania. Hi, Tania. So,
hi,
yeah, we're speaking about the regulatory. So maybe you can share to us maybe what you think about the current regulatory trend for fintech industry. What do you think about its success level, promoting responsible fintech innovation, and also for the consumer protections?
Sure, it's a very good question. I think that the first thing though that we have to think about is kind of what are the different fintech models that we might be referring to, and then certainly how those are placed within either an existing sort of core regulated activities, or one thing we have talked a lot about already are those policy innovations, those enabling technologies. So I want to just first frame the question, and then I can respond specifically to those regulatory objectives. So when we've been looking at regulation of financial technology, both at a hyper-localized level and globally, I think the first thing to consider is that we really do have a number of different financial technology models. And so the specific policies or regulatory objectives are going to vary pretty significantly. When we look at sort of a global approach to regulating financial technology, I think what we can say is that all regulators do seem to agree and root their, their approach in, a balance of mitigating risks and encouraging innovation. So when we're looking at this broadly, what we're considering is the impact of financial technology that can be viewed within sort of 4 overarching themes. The first, of course, being financial inclusion. To answer your question specifically, where we've seen a positive impact from fintech vis-a-vis financial inclusion has certainly been in the lowering of costs and creating more efficient traditional and informal systems. This has related to access to credit via alternative data sources. This has particularly been important for the unbanked and the underbanked. And then creating, more simple, more reliable, more significantly faster, ways of transferring, be it payments or accessing credit. So that speed has certainly been important. But from a regulator's perspective, this also means that they have to balance potential other negative impacts that could be, related to higher borrowing costs, gender biases, income biases. So for a regulator, it is definitely a balancing act. Some of the other regulatory objectives that we really look at, or that you will see a regulator framing their fintech approach, certainly will be with respect to financial stability, financial integrity, and then consumer protection, which is what you've mentioned already. Where it relates to consumer protection, I think that it's clear that for a lot of regulators, this has been around, increasing transparency, better, more information that a consumer can utilize to reduce, asymmetries of information, and certainly ability to have, that comparison of different financial products, of different financial services. The negative impacts, of course, can be that financial technology might actually create over-indebtedness. It can create a lack of data protection. This is, just things that regulators are concerned about, not saying that this is what fintechs do, but that this is what regulators are concerned about. And so when you look at how a regulator is approaching, these really critical statutory objectives, it's not then surprising that when you look globally, we've kind of seen sort of 4 overarching themes. A first baseline scenario would be that, you don't have regulation, you have a wait and see approach, or it's actually full on prohibition. What we refer to as a wait and see approach, what the World Bank has referred to similarly. And this is kind of following a view that, that certain phenomena should be regulated only when it's become sufficiently widespread. Now, as financial technology has evolved, we've seen that this is not really the case anymore, certainly not across the Asia Pacific, and a number of emerging economies. What we see more and more from regulators is actually extending regulations that are maybe still conceived or rooted in traditional financial services. I like to call this stretch to fit. The BIS actually put out a paper recently where they refer to this as sort of adjusting of existing regulation. But really what this is rooted in is that, you know, what we're taking is adjusting or mainly relying upon existing regulations, but to add that technology specific element either into existing law, into existing frameworks, into that existing guideline or regulation. This is what we've seen the most, certainly as financial technology evolves and becomes embedded into the regulatory, the core regulatory activities from a bank, from the banks, from securities commissions, so on and so forth. And then I think that the next evolution on regulation, and especially then where it will enable things like, you know, financial inclusion or address sort of concerns around asymmetric information on, for consumers, is around this sort of a test and learn approach or a bespoke regulatory approach. And that's, I think, where we can really root things like, you know, innovation offices, regulatory sandboxes, kind of all of these regulatory initiatives that are innovation initiatives that both look at the financial technology activities, but then also at enabling technologies such as open banking, such as digital identity, to really create an infrastructure that could enable a financial technology industry, not just certainly in Indonesia, but at a global level. I hope that that kind of answers the question. I don't think it did, but I waffled a bit.
Tania, as we know that several countries nowadays have implemented regulatory sandbox, right? So one of Singapore, of course. Actually, how important actually the role about the regulatory sandbox, and what can we learn so far from this experience of many governments that also implementing the regulatory sandbox in their countries?
Sure. Well, I think regulatory sandboxes can be a very useful innovation initiative at a policy or at a regulatory level. If you think about kind of what a regulatory sandbox can do for a regulator, this can inform longer term policy, but really enabled by a learning and experimentation process. So that's ultimately what the sandbox is, right? It's a testing arena where either an existing financial technology firm or maybe even a traditional financial services provider can sort of test that innovation or test that new fintech enabler within a kind of safe environment that's closely observed by the regulator. And so for a regulator, this can be very meaningful and with respect to that longer term policy implications. It's certainly, I think what we've noticed when we see, you know, countries that are taking a sandbox approach or an innovation hub approach is that this does signal a very clear commitment towards providing, you know, towards innovation with not just with fintech, but also in the underlying financial infrastructure. And so this does then create, you know, a promotion of communication and engagement with those different market participants, be it the fintech, traditional financial service providers, and those that are being tested within that closed environment. And I think that one of the other kind of clear benefits of a regulatory sandbox from a regulator's perspective is that it does allow for a regulator to update either specific you know, regulations or you know, sort of core activities within a broader regulatory approach that could benefit innovation, but also, again, always safeguarding against sort of, you know, the known unknown and the unknown unknown. For the platform, for that financial technology platform, or for that traditional financial services firm that is testing that innovative, sort of enabling technology. This definitely can also reduce the time to market by creating a streamlined sort of process for authorizing this new technology or this new activity. It definitely is reducing for both the firm and for the regulator, that reducing that regulatory uncertainty. So when you do see a new technology emerging or a new, fintech business model emerging, this does kind of help reduce that uncertainty, allows for both the firm to test their product, but also for the regulator to kind of, in a very safe environment, sort of adjust perhaps either a bespoke approach to regulation or a stretch to fit approach, tweaking existing regulatory, tweaking existing processes or, sort of streamlining those processes. And then it certainly is going to allow for that regulator to receive kind of very quick feedback on the different requirements that those fintechs have in order to operate, but also what those potential risks are going to be. And then I think, since we are going to be kind of referring to that consumer side and how this can, benefit financial inclusion or consumer protection, this definitely is, a safe way to promote or introduce a new or potentially safer products. It can increase access to those financial products and services whilst you're kind of having a sort of a more pragmatic approach to kind of authorizing a new activity. So rather than just authorize something, you actually can, have a more streamlined process and sort of dedicate slowly what are going to be the correct processes, what is the correct way of authorizing this financial technology firm or this activity that could be utilized by a financial technology firm or traditional financial service provider in a really like fit to purpose manner. When we've looked at the regulatory sandbox, this has usually been around that product testing or testing of a policy. But I think one potential downfall that we still see is that, and especially during COVID, was that the ability for a lot of fintechs to actually access a sandbox was substantively diminished. And that has definitely kind of resulted in perhaps a slight stagnation of the innovation that might have happened, or at least kind of creating a situation where those innovations could fall within a supervised and regulated environment. So that's something that I think, as we're, knock on wood, getting out of the pandemic, can be course corrected to kind of create more opportunities for different financial technology firms to participate within sandboxes. And in light of, those sandboxes maybe not being available, figuring out ways of creating, innovation hubs or innovation offices, pretty much all of those innovation enabling regulatory policies that can really help a financial technology firm kind of, get its feet on solid ground. And then I think the last thing I would just note is that we don't really have cross-border regulatory harmonization. And so that's not just, with fintech, that's broadly speaking. And certainly then you don't see the existence of many multi-jurisdictional sandboxes. And any way you cut it, and we've heard from so many of our panelists already, financial technology is in many respects a cross-border activity. So thinking about how, you can see, that maybe that multi-jurisdictional approach could really enable, in particular in the Asia Pacific.
Okay. Thank you, Tania. We still have a few minutes, right? We still have a few minutes for this panel discussion before we go to Q&A session, before I open the questions from the Q&A box. Maybe I will go back to Pak David. Pak David, are you still with us? Okay. Pak David, speaking about the regulatory sandbox, what do you think about how is it compared to the regulatory framework in other countries? We know that the current regulatory framework is sufficient to accelerate fintech growth and also potential here in Indonesia, and how the readiness about how the readiness of bureaucracy and also government to support the regulatory sandbox process in Indonesia.
Thanks, Tiffany. Very spot on, basically, questions. I think a good reference point is actually the so-called kata kunci, the so-called password that has already been mentioned by Pak Triyono earlier. I think the approach from the Indonesian government side is going to be aligned towards that concept of proportionality. And that is quite important from a couple of standpoints, the way I look at it. Number one, I think we can't run away from the reality that Indonesia is not a common law country. We are a civil code country. We are a country where the jurisdictional requirements in terms of documenting a transaction, formalizing of a certain basically interactions in a formal manner requires basically much more rigorous documentation frameworks to be complied with. So I think that is something that that is just inherent. We can't avoid that. So I think some adjustment will have to be made with regards to Indonesia eventually so-called adopting some of the global best practices, some of the standards, some of the white papers which are actually currently circulating in terms of introducing some kind of regulatory framework for the sector. Now, secondly is the reality that the addressable market itself, the addressable segment, is also in a way unique in Indonesia. Unique in a sense, not only just from the point of view of financial literacy, but from a point of view of so-called level of understanding and sophistication with regards to the myriads of financial services optionalities. That in itself requires some further basically financial education programs to be introduced more widely to the mass population. So the way I look at it, I fully agree with Pak Triyono when he mentioned that Indonesia's basically Indonesia government's approach is going to be proportional. I think we need to take into account all of this in order to ensure that the current underserved basically segments are actually enjoying the benefits of the disruptive basically technology from digital financial services. But at the same time, we don't basically put in place something that is going to be so burdensome that will basically limit innovation. But it has also to be balanced with regards to the jurisdictional requirements that does require some element of a framework being put in place. So I really like basically what Pak Triyono have introduced, proportionality.
Okay, thank you, Pak David. Maybe before I go to Q&A, last question to Matthew. Matthew, maybe you can share to us about what is the most distinctive of Singapore's regulatory framework that helps the fintech industry grow in Singapore, and how it goes. I mean, how the regulatory sandbox goes in Singapore.
Sure, thanks, Tiffany. So I think the stretch and fit approach to regulation that Tanya mentioned has almost been the default in Singapore. And the MAS's sandbox has been particularly distinctive and important to challenging that. And like Tanya mentioned, I think this has really signaled and evolved a big commitment from the MAS, which has really been demonstrated in a number of ways. I think historically, if we look at regulation, regulation has been a very paternal function, characterized by oversight, to the point that regulation has often been seen as a barrier to market entry, especially for startups and SMEs that have limited funds, limited capital available, and have to be able to say that they're compliant in order to be able to access the market. The MAS's sandbox challenges that and challenges regulation and changes regulation to being more of a collaborative process, with the regulator and fintechs working very closely together to ensure that the regulatory approach is tailored and is proportional. with appropriate safeguards and governance then being incorporated into systems and operating models in ways that aren't completely restrictive. So the collaboration that the sandbox, I think, really demonstrates in Singapore does help reduce regulation as being a barrier to market entry. It changes that very paternal approach to regulation that we've seen historically. And it's doing that by incorporating a greater level of collaboration and real-time input and feedback. I think as time passes, we'll see regulators' general approach to regulation becoming more real-time and collaborative in a way like we see in the sandboxes at the moment, particularly in view of the fact that new technologies, etc., facilitate that real-time monitoring and make this much more possible from a practical perspective. If we look at Singapore as a case in point and look at the MAS and its approach beyond the sandbox, a couple of supporting sort of projects and endeavors that have been spearheaded by the MAS include the API exchange, which is essentially an open architecture platform designed to facilitate fintech collaboration. Now that could be of particular interest to stakeholders to the extent they're not familiar with that. Essentially, it's an open architecture marketplace where fintechs can identify problem statements and for peers or other industry participants to propose ways to solve those problem statements and work together and collaborate in a way, including in a way that might be within a sandbox, in order to try and work through some of these problems and to try and identify workable solutions. And also, we look at what the MAS has been doing much more widely with some of its counterparts in other jurisdictions, and looking at the projects that the MAS has been completing with other central banks, like Project Ubin or Project Jasper, as it's referred to in Canada. Those activities are clearly being very impactful, and they are very much demonstrating the level of commitment and support that the MAS has been prepared to commit. It's clear that those projects are also contributing to infrastructure developments that stand to benefit the entire ecosystem, not just in Singapore, but also within Southeast Asia and the wider region also. So I think the sandbox is very important. I think it does represent a sea change to the regulatory approach that we've perhaps been more used to historically, but it is only one part of other sort of wider efforts that the MAS and other stakeholders like the Singapore Fintech Association have been working on to try and deal with some of the frictions in the system, addressing regulation on the one hand and the barriers and the difficulties that creates, but also at the same time trying to improve and increase the level of collaboration to make sure that any benefits that are realized from the sandbox are cascading through the ecosystem through leveraging these other initiatives that I mentioned.
Okay, thank you, Matt. I will go to Q&A sessions because our time is very limited. Maybe I still have 10 or 15 minutes to open the questions for media and participants here. Okay, so here they are. I have some questions. Maybe I will go to my first question from someone anonymous. This question addressed to Pak David from EY. Okay, questions is where is Indonesia position in World Bank fourth quadrant? What is the expectation from Indonesia fintech player to government?
I think if we refer specifically to the World Bank basically model, our take of the current situation is perhaps the top right quadrant is perhaps something that is a bit more suitable for the time being. So certainly more engaging, more basically direct platform for the regulators to also test various basically frameworks. And that is also, once again, guided by the, perhaps, we can use the term, the uniqueness of the market segment. Because if you look at it, let's call out the cash-based so-called segments. It will always be there. So, are we saying that, it is not possible to eventually migrate, everything basically online to become a cashless basically ecosystem? Yeah, eventually we might get there, but the efforts and the time required to actually to do that, is actually quite extensive. So for the time being, there is always going to be that segment that is slightly different in terms of the typical, transparency requirements, framework of financial technology, basically, or digital financial technology, so-called concept. So I think, given that, perhaps, for the time being, it is that particular quadrant. But I think as the ecosystem as well as the players further evolve, then perhaps some adjustment can actually be made.
Thank you, Pak David. Next questions from Pak Muhammad Adi Surya Pratama, from Mr. Adi Surya Pratama. This question goes to Andrew, Tania, and Matt. How does fintech have any capability to transmit its effect in achieving sustainable financial service and economic growth? Okay, maybe Andrew first. Please, Andrew.
Sure. I guess obviously the topic of sustainable finance and green finance is certainly coming to the forefront. And I think, certainly fintech and technology providers are going to offer a lot in terms of data verification, validation of, sustainable outcomes. So if you're, issuing a green bond, how do you really know that, the use of those funds was gone to a project that had meaningful, environmental outcomes, for example. So I think that specifically, there's going to be a lot of opportunity in that space going forward, and we do see a tremendous amount of interest. The BIS has announced the Green Swan Conference on this very topic in early June. And in fact, we're going to be announcing another initiative with the G20 tomorrow in this space as well. So we're keenly interested in kind of how technology, fintech and technology providers can kind of help us achieve sustainability outcomes, and obviously in concert with that, hopefully more financial growth. So that's just my 2 cents on that, but I'm sure I'll pass it over to my panelists.
Next, Tania. How does fintech have any capability to transmit its effect in achieving sustainable financial service and economic growth?
Yeah, it's also, I agree pretty much with all that has been said already. But I think what we need to consider is that, so financial technology, platforms and activities, they are digitally native. And so I'm going to just root this into COVID for a moment, because this has been one of the arenas that we've been studying a lot recently, where we've seen an influx of new customers that are now being able to utilize financial services, be it access to public, commercial, or, sort of non-traditional financial digital services. Because financial technology is occurring online and is digitally native in ways that maybe the traditional sector is not, really this has enabled a kind of a new infrastructure that allows for consumers to, access new, new forms of credit or new payment rails, and also to kind of create a far more level playing field for how those individuals can, kind of assess their affordability, access, new tools, and certainly what we've noted when we did our COVID study with the World Bank at the tail end of last year was that just the sheer influx of new customers that came in particular from the developing world was really also highly linked to individuals that have been traditionally unbanked or underbanked. And so although not all financial technology platforms may have a mandate for financial inclusion, this definitely has been one of the side effects that we're seeing. Certainly more testing and more analysis needs to, more research needs to be done around, have we seen other exclusionary things occur, either to pensioners or older populations or rural populations. But right now, what our findings suggest is that actually financial technology, be it digital payments, digital banking, wealth tech, insurtech, has created an environment for a greater number of individuals to access financial services, and particularly through a digital landscape. I just want to comment on one other thing that I think does deserve maybe just a slight distinction when we talk about the different regulatory or policy activities, especially as it relates to financial technology and potential financial inclusion. And that's just that there's sort of, in my mind, three overarching themes that we need to think about when we look at regulation in fintech. The first is certainly just that core regulatory activities. So streamlining authorization, faster licensing processes, exemptions perhaps to operate new financial services or products. That from the regulator, that would be like your kind of the most core regulatory activities. And when you think about how that's been affected during COVID, one of our results from our recent study showed that, especially as it related to onboarding new customers, having support from your regulator for those core regulatory activities is going to be crucial for fintechs to actually be able to fulfill this mandate that you've posed, right, of financial inclusion and of greater access. But the second two is that you have, on the one hand, enabling regulatory innovation initiatives, so sandboxes, innovation hubs, things that are directed at a financial technology firm in order for them effectively to go into a system that would be, a core regulated activity. And that really relates to, those closed environments, those testing environments for activities. The third distinction would really be the policies that are enabling innovation of infrastructure. And that also relates really closely then to what you've just sort of posed. And that would be like those infrastructures or enabling technologies that are underpinning the infrastructure, the financial rails that you need for a working and healthy financial system. This has been quite crucial during COVID. Having strong innovation in those financial rails, either through open banking or open APIs, greater, regulatory, approach and stance on cybersecurity and cybersecurity protection, digital identity. So again, enabling citizens to have access to public, commercial, or other financial services. Those are sort of the other kind of parts that really do relate to a conversation on financial technology regulation, but is not specific to financial technology regulation, right? That's sort of more broadly what you need to see in a developing digitally native financial infrastructure. And that's, I think, where we've seen that financial technology firms, where you do have enabling policies around open APIs, where you do have enabling policies around, cybersecurity and digital identity and sort of just those more digital health checks. That's where we've seen from a research perspective that financial technology has had really high impact on bringing those traditionally financially excluded into the system, but also facilitating not necessarily unbanked, but underbanked individuals or underbanked entities to utilize existing traditional financial services as well. Because financial technology is not just about that sort of retail facing side, but can also quite critically be around that market provisioning or enterprise provisioning activities as well. And so what I think is really interesting about financial technology is that it's not always necessarily we're just trying to, or it's not always necessarily just focusing on accessing those retail clients, but creating an enabling environment for traditional financial service providers or other fintechs to access those as well through the creation of that enabling technology. And that's where you've seen regulators and policymakers collaborating closely with fintechs and with the traditional space to enable that to enable outcomes that will create greater financial inclusion.
Okay.
So those are the three distinctions I just wanted to pull out.
Okay, thank you, Tania. I still have a time to give Matt to answer the questions. Please, Matt.
Sure, thanks, Tiffany. To be honest, I think there's not much that I can usefully add to what Tanya was just explaining. I think where I find things particularly interesting is if we put regulation aside for a moment and ask how fintech can be deployed for ESG purposes, I think it's very clear from a technological perspective that a lot of recent developments and a lot of things that we are seeing upcoming can be deployed to ensure sustainability and to achieve ESG benefits. So if we think about sort of sustainable debt finance, for example, one of the key concerns amongst the community at the moment is about the risk of what's being referred to as greenwashing, which is essentially making existing debt financing projects look more environmentally friendly and sustainable than they are. I think where fintech really comes into its power with these types of applications is that when we think about the proliferation of Internet of Things devices, oracles, things like blockchain and immutability and automation that comes with it, that what that really does is enable the automated capture of data in a very clear and transparent way that can then be used to properly verify whether something is sustainable and whether particular KPIs have been met and achieved. So I think it's very clear from a technological perspective how these different types of technologies and new developments can be applied to achieve these types of benefits. I guess where it does become much more difficult is how do you do all of that in a way that is sensitive to the regulatory requirements and to the different interests of the different stakeholders. And I think that's ultimately where what Tanya was just talking about becomes much more prevalent. So I guess perhaps I'll just end there, but I think the key takeaway for me is that fintech has a very clear role to play in ESG applications. There are complexities to work through, but I think over time we'll start to see more and more fintech applications being deployed in that particular space.
Okay, thank you, Matt. I have one more questions because our time is very limited. Maybe I still have 5-6 minutes to our last questions. So here is the question from Mr. Charlie Sanjaya. This question addressed to Tania and Andrew. So the question says, based on the known case studies, what are the common pitfalls for regulatory sandbox? What has gone wrong in the implementation before? Maybe Andrew first.
Sorry, I just was on mute. I actually posted a link to the World Bank paper on this topic that's quite good in terms of, it's a very, very comprehensive document looking at the 70+ case studies from around the world that they were able to consolidate. But I think there's definitely a couple of key points in there. I don't have it open in front of me at the moment, but basically, the connection to the legal system. So as it was mentioned, civil law versus, the legal regime. Is it possible to create these exceptions in sandbox environments in a real sense? So there's limitations in that regard. The maturity of the fintech ecosystem is another key criteria. Obviously, there has to be kind of a critical mass across the variety of different project and product kind of spectrum, if you will, to enable a sandbox to work. Not every applicant will obviously be approved and kind of walked through that sandbox, 6 to 12 months experience. The other kind of considerations, I guess, would be, around, apologies, I've just lost my train of thought, but Tanya, I'm sure you have more to say on this.
Andrew, I think you've like really covered it super well. I would tend to agree with everything you've just said. I think that there's a couple of pitfalls that we've seen when we've done research in sandboxes. The first is just the capacity for the regulator themselves. I think that this has been one of the biggest problems that regulators have, and that is around having sufficient staff to participate in not just in sandboxes but also in innovation hubs. And so in terms of the number of staff available that can actually really work in a sandbox, but also the technical knowledge that's required, especially when you are looking at new and emerging technologies that might not fit perfectly into some of the existing frameworks that we have. The second consideration, certainly, and I agree with you, Andrew, is always contextualizing your sandbox within your existing frameworks, your existing legal frameworks as well. This is where we've seen, sometimes you will see countries that have opted for creating a sandbox, but mimicking it after other jurisdictions. And so while it is definitely this co-learning, co-knowledge or knowledge transfer is vitally critical, especially when you are looking at how to regulate a new space, not rooting that sandbox into your existing frameworks is quite important. The other thing is that sometimes actually there's this, because the sandbox is such a trendy, sexy kind of term right now, you sometimes see regulators that are opting to jump to the sandbox before maybe introducing an innovation hub. And so I think that there's a little bit of a we're gonna run before we can walk mentality. And this actually can lead to a failed sandbox where you do not have either sufficient applicants, or the applicants that you receive are not fit to purpose for the sandbox that you've envisioned. So I think that some of this relating to that capacity building is really understanding what your existing fintech marketplace looks like. And then I think 1, 2, 3, I think we're on the fourth. The fourth thing, and again, it just relates to the time. Sandboxes are resource intensive and they take time. Financial technology firms sometimes may not have the sufficient runway to get through that whole process. So it's really balancing, what your sandbox, what the goals of that sandbox is, so that you are enabling these new ideas, new technologies, new business models in such a way that they don't actually run out of that runway or fall off of that runway. I'd say that those are critical things to consider.
If I may, I just remembered my third point, which was the BIS actually published a paper on this fairly recently. And when you can get these elements right, and when you can kind of achieve a more successful outcome from a sandbox, there is some evidence that the benefits of that directly flow to the participants, in that they study kind of the universe of participants and kind of the funding outcomes for those fintechs and startups. And in fact, they're able to kind of empirically show that I think it was about 15% increase vis-a-vis competitors who were not in a sandbox. They were able to raise kind of an additional 15% on their funding round. So there's definitely some benefits for the participants as well, assuming all of these stars align.
Yeah. Okay. Thank you so much, Andrew, Tania, Matthew, and also Pak David, Pak Anugrah, sharing your perspective, sharing your thoughts, sharing your experience. It's been this is really 2 hours, right? 2 hours fruitful discussions. So maybe from this panel discussion, we can learn that this fast and a global growth of fintech industry doesn't come without challenge, of course, because fintech companies are interfering more and more in the financial transaction operation, and the regulators are increasing their focus on fintech regulation. So maybe we hope next regulators, companies, or stakeholders can work together, can work together, collaborations to scale up this fintech industry to the next level. Once again, I have to end this panel discussion because our time is very limited. Once again, thank you. Thank you so much for joining us. Andrew McCormick, Tania Ziegler, Matthew Lonvat, and also Pak David Rainbow from EY Indonesia for joining us today in this panel discussion. Okay, but if I want to ask you to all speakers to stay on your position, because after this we will have a photo session virtually. Okay, so Matthew, Tania, Andrew, Pak David, and also Bapak Triyono Gani, we will have photo sessions. Countdown will be for me. So, okay, on your positions, ready? And 3, 2, 1, cheers. Okay, one more. Okay, give your best smile before we end this panel. Okay, once again, in 3, 2, 1, cheers. Oh, okay. Thank you once again, Pak Triyono Gani, Pak David Rimbo, and also Mr. Andrew McCormick, Tanya Ziegler, Matthew Lovett from Singapore for joining us to this panel discussion, Fintech Talk, Scaling Up Fintech Industry, how regulatory framework can support and accelerate the industry to the next stage.
Terima kasih Bapak Ibu. Terima kasih Pak Tri. Terima kasih Pak Edwin. Terima kasih
semuanya. Terima kasih Pak Edwin.
Terima kasih semuanya Bu Fitri.
Sukses Pak. Salam sehat Bapak. Ya siap.
Thank you Bu Messi undangannya. Ya, thank you very much. Terima kasih. Ya, sukses selalu Pak. Bye.
Aku belum closing.